Okay, let's unpack this. Tesla's revenue took a 9% hit compared to last year. What does this really tell us about the road ahead? Especially, trying to get the key stuff in about 10 minutes.
Yeah, it's fascinating because, well, many people expected a tough quarter, right? But the actual results, they still came in below even those lower expectations.
Right.
It really makes you wonder about the underlying pressures, doesn't it?
Exactly. So for this deep dive, our goal is, like you said, quick but thorough.
Yeah.
We're focusing on Tesla's Q1 2025 earnings, just released. We've gone through the report itself, news analysis, expert takes, and our mission is basically to pull out the most important insights, get the drivers behind the numbers, and see what Tesla's planning next. All, pretty fast.
And connecting that to the bigger picture, I mean, this quarter is a really vital snapshot. It shows how Tesla is navigating this rapidly changing auto landscape. Crucial stuff for anyone following the industry.
So let's jump right in. Headline financials, and yeah, pretty clear Tesla missed. Revenue was what, $19.34 billion?
Yeah, against expectations that were more like $21.1 to $21.4 billion. So
Yeah.
noticeable gap.
A big gap. And adjusted earnings per share, just $1.27. The street was looking for closer to $1.41 to 44 cents.
That does raise a big question. What caused that much of a miss compared to what analysts thought? Was it one big thing or like a bunch of smaller factors adding up?
And the year-over-year numbers really kind of slam it home. Revenue down 9% from Q1 2024. That was $21.3 billion. But EPS, that took a much bigger dive, down 40% from $2.25 last year. That's a big step back.
What really stands out to me there is just the scale of both declines, revenue and earnings. It suggests, more than just a little turbulence, something more fundamental might be shifting.
Okay, let's drill down into their main business, the automotive side. Similar story there, unfortunately. Automotive revenue was $13.967 billion.
Wow, down 20% year over year.
Exactly, 20% lower. And vehicle deliveries, only 336,681 units delivered. The expectation was closer to 390,000.
That 20% drop in automotive revenue, that's particularly significant. I mean, that's their core business, right? It really underlines the intensity of the challenges they face this quarter.
And Tesla themselves, they pointed to a couple of key reasons here. First, production disruptions. They were doing Model Y line changeovers across all 4 factories.
In Fremont, Shanghai, Berlin, Texas, yeah.
All of them. And second, just the ongoing pressure on vehicle prices. So it sounds like maybe a strategic move for the future, but definitely hurting them in the short term.
That's a really crucial point. The Model Y is their biggest seller, right? So any pause, any change over there, it's going to ripple through everything, deliveries, revenue,
right,
and doing it across all plants at once. That signals a pretty major strategic decision they made.
Okay, so profitability, how did that look? Now, their GAAP gross margin, that actually came in a tiny bit better than expected, 16.3%. The forecast was 16.1%.
Small positive surprise there, yeah.
But operating income, that just plummeted, down 66% year over year to only $0.4 billion, which gives them an operating margin of just 2.1%. Tiny.
Yeah, that slight beat on gross margin is interesting, but the huge drop in operating income and that really thin operating margin, that just underscores the profitability challenge right now.
And here's where it gets really interesting, I think. Regulatory credits. Tesla brought in $595 million from selling those in Q1.
Right, the ZEV credits they sell to other automakers.
Exactly. And get this, if you take that $595 million out, they would have actually faced a pre-tax operational loss of around $200 million.
Wow. So strip that away, and it's a completely different story of profitability. That's not just a minor detail, is it? It really raises questions about, the core profitability without these external boosts.
Absolutely. And digging into why those operating numbers were squeezed. Tesla mentioned lower vehicle prices, obviously the lower delivery numbers we talked about, and also a big jump in R&D spending. Specifically, they said, on AI and their upcoming new vehicle platforms. So investing heavily, even while earnings are down.
And that increased R&D spend, I mean, yeah, it hits the current bottom line, but it's absolutely crucial for their long-term goals, isn't it? Especially things like FSD, new vehicle designs. It's a trade-off they're clearly making.
Okay, now, it wasn't all bad news. Their energy storage and other segments actually showed some real strength. Energy storage deployments hit a record 10.4 GWh. That's serious growth.
Yeah, that continued strength in energy storage is a really notable bright spot. It's likely driven by demand for grid-scale storage, maybe home energy too, areas where their battery tech really shines. Good diversification.
And it sounds like that's got momentum. Their mega factory in Shanghai.
Right.
produced over 100 megapacks, now heading to customers.
Good sign.
Plus, services and other gross profit, up 25% year over year. They said that was driven by better margins on maintenance and collision repairs. Even the supercharger network grew usage by 17%.
So these other parts of the business, the energy and services, they're showing resilience. They're growing. It provides some balance against the automotive challenges.
Let's quickly touch on guidance, what Tesla's forecasting. They're still saying those new, more affordable vehicles are on track for production first half of 2025.
Okay.
Using a mix of current and next-gen platforms, they said, and existing manufacturing lines to, try and speed things up.
Right.
Although they did admit the initial ramp-up will probably be slower than they first hoped.
Well, reaffirming those models is still key, isn't it? To address concerns about their future lineup competing in different price segments.
And the Robotaxi plans. Still aiming for volume production in 2026.
Ambitious.
Yeah, and they even teased the Cybercab design reveal for August 8th this year, plus launching a Robotaxi pilot in Austin this June, apparently using Model Ys with unsupervised FSD.
That Robotaxi initiative, that's potentially transformative for them, isn't it? Those milestones, the reveal, the pilot, people will be watching those very closely. It's a tough field.
One last future thing, Optimus robots. They expect to deploy thousands in their factories this year.
Thousands. Wow.
Yeah, with the long-term vision of maybe making 1 million units a year by 2029 or 2030. That's out there.
The potential for Optimus to change their manufacturing, it's huge. It could really impact efficiency, costs.
Yeah.
If they can scale it successfully, of course.
But here's a really significant shift in their outlook. Tesla has actually withdrawn its long-term growth forecast.
Oh, really? Pulled it?
Yeah, pulled it. And they're going to reassess 2025 projections next quarter. They cited, and this is a quote, escalating uncertainty in automotive and energy sectors.
Uncertainty? Due to what?
Mostly rapidly changing trade policies and the sort of political climate. They quoted their shareholder letter about how shifting global trade rules are impacting supply chains and costs.
Okay, so pulling the long-term guidance, that really speaks volumes about the external uncertainties they're facing. Mentioning trade policies, political stuff, highlights those big macroeconomic challenges.
On the tech side, though, some progress. They launched FSD Supervised in China, still aiming for the fully unsupervised version in the U.S. before the end of this year. And apparently, Model 3, Y, and Cybertruck are now driving themselves autonomously off the assembly line to the parking lots in the U.S. factories. No humans involved.
That's pretty cool. And those FSD advancements are critical, aren't they? Not just for current cars, but especially for that Robotaxi dream. Shows they're still pushing hard on autonomous tech.
So how did the market react to all this? Interestingly, the stock price actually went up a bit in after-hours trading, despite the misses.
Huh. A modest increase.
Yeah, maybe relief it wasn't even worse. Or maybe some optimism about those future plans we just talked about.
Yeah, that little bump could suggest investors are, trying to look past the immediate hurdles, focusing on the potential of the new cars, the robotaxis, taking the longer view, perhaps.
But those immediate hurdles are very real. You've got declining demand, more competition. BYD gets mentioned a lot.
Big competitor now.
And those macroeconomic things like tariffs, trade policy shifts. It's a tough environment. Tesla's clearly banking on those cheaper EVs and the robotaxis to reignite growth.
Right.
But you can understand why investors might be cautious, especially given the pressure on operational profits right now.
Absolutely. The competition, the macro pressures, those are significant near-term obstacles. Success really hinges on executing the new vehicle strategy and making real progress on robotaxis.
On the plus side, they do have a lot of cash, $37 billion on hand.
That's a healthy cushion.
Yeah, provides a big buffer during this uncertain time. And operationally, they hit some milestones, too. Gigafactory Texas made its 400,000th vehicle.
Okay.
Nevada had record battery pack production. Berlin built its 500,000th Model Y. So the factories are still churning things out.
Yeah, those operational points show the manufacturing base is still strong. It's a solid foundation for when or if demand picks up and those new models start rolling out.
So wrapping up our quick 10-minute rundown here, key takeaways. Q1 earnings missed, mainly due to production changes and price pressure.
Right. Profitability really leaned on those regulatory credit.
Yeah, crucial point. But the energy storage business, definite bright spot.
Strong growth there.
But the overall growth outlook, now kind of uncertain, thanks to the economy and trade stuff, leading them to pull that long-term forecast, even though they have these really ambitious future plans.
So understanding these Q1 results gives us that vital snapshot, doesn't it? Shows where Tesla stands right now, navigating some choppy waters in the auto and energy sectors.
Okay, final thought then. Given these results, the challenges, but also these huge ambitions for robotaxis and cheaper EVs, can Tesla navigate these headwinds and get back to significant growth? Or are these signs of maybe a tougher, less predictable future ahead? What stands out to you as the thing to watch most closely in the next few quarters?